Welcome to Farm Your Daily, a Field Forward podcast. I'm your host, David Geiger. Today on Farm Your Daily, we're past the first week of November with a government shutdown and newly announced trade deals. So how are the markets reacting? Don Roose, president of U.S. Commodities, joins us to break it down. Please be sure to like and follow the podcast as well as our social media at Field Forward Pod. We would love to have you join our community, keeping folks informed about what is affecting our farmers. This is Farm Your Daily. And joining us on Farm Your Daily, we have Don Roose, president of U.S. Commodities. Don, joining us here. Thank you so much for your time, Don. And you are a market analyst, and we have spoken for probably a good decade or so talking markets. And we have reached a pretty wild moment. And since we are now past the first week of November, we have the government shutdown. That's now the longest government shutdown in the history of the country. We have the trade deals that have recently been announced between the U.S. and China. There's a lot of uncertainty and a lot of issues going on amongst the commodities. And I would love to hear what you have to say just about what's going on. First off, let's just narrow in and start specifically on corn, beans, or maybe beans specifically because of the China deal. Where do you say we're at in the grain markets from your perspective and with your expertise?
Well, I think, let's back up. Certainly the soybeans have been the leader here, and actually that's not true. It's been the biggest bear market before we started this rally was the soybean meal. The soybean meal moved to the upside like 15, 16 days in a row, adding premium to the market. While the soybean meal was moving up, the funds didn't move out of their short position. What they really did, they're still short about 60,000 contracts. What they did is added to their long position in soybeans from a short position, long about 130,000 now. But what we really did in the soybean market is we added, and the meal market, we added risk premium to the market on hopes that we were going to see a solid, very positive deal with China, because we've been told that. And we've been told that we have an agreement through Secretary Treasurer Bessett, our chief negotiator, along with Greer. But, the bottom line is, while that is now in the rearview mirror, we're talking how positive it is. They're supposed to buy 441 million bushels by the end of January. We've heard nothing out of China so far. We've seen nothing on the buying front. We've seen them buying more soybeans again this week, last week from Brazil. So, I would say it's still very murky, very questionable what and when is China going to buy. And because of that, the rumor started this week that they have been buying heavily soybeans in our border trade market.
Two questions popped up as you were speaking there. I want to touch on the soy meal part first, because one of the world's largest producers of soy meal is Argentina. And there have been some recent news around Argentina as well, with the relationship between the U.S. and Argentina, and also with them being a very developed market. China's been helping them develop their abilities to trade more. And they had a big sale of beans not too long ago, because their government, I think, did no taxes for, 3 days? Or it was a few days, where they allowed the farmer to sell without taxes of some kind. Is that correct?
Yeah, and you're right. To look at your first question, Argentina is the largest soybean meal and soybean oil exporter in the world, because what they do is, rather than shipping soybeans, they manufacture the product and then put it out. So that's what they do. And as far as the tax situation, that's exactly right. How Argentina, one of their big revenues for their country is taxes. And what they do is they tax the grain market going out, very stiffly, over 20%. So they tax those. And what they did in order to help out the farmer, they went to work and took the tax off until they reached a certain amount, when then they put it back on again. So bottom line, it gave the farmer a big advantage for prices, and it put soybeans in the world market much cheaper. And so we lost some of that competition. And by the way, China bought a lot of those soybeans at that time.
So, with Argentina doing that and putting a bunch more supply out on the global marketplace, how did we then turn to having this bearish outlook and this opportunity where soy meal went up, as you said, 15 days in a row?
Yeah, exactly. I think it's just one of those that, in this day and age, you really have a huge commitment by the funds. In fact, they can overwhelm any of the commercial trade that is going on because they move in short order. So I think it's simply that the funds were heavily short the soybean meal. They lightened up on some of it, but really bought a lot of soybeans against it. So what you have is the big crush changed. Soybeans went up, meal went up, and oil went down just slightly. So I think is soybean meal really positive? No. In fact, it's probably not worth any more than it was before the rally started, because we're going to go into competition with Argentina soon and with Brazil also very quickly. So I would say it's one of those markets that probably was an overachiever.
So, as you mentioned, there was a deal with China. They're ostensibly going to be buying our soybeans, and there were some sales, I believe, with the initial news of that. However, we are in November, and well, most people are done harvesting their soybeans, and we've had very, very few sales with that. Before it was none. Now, very few sales of soybeans specifically to China. Their promise for this year was half of the normal amount that we usually sell to them. Where does that take us? Where is this supply going to go if not China after harvest?
Well, it's very interesting, David, because what happened is our ending stocks are probably much larger than they were last year. At the same time, the soybean markets are over $1 higher in the cash and the futures market than they were a year ago. So very similar to the soybean meal, the fundamentals aren't that great, but the technicals push to the upside. It does bring up, is that really true that China, the rumor was that they bought 40,000 contracts of soybeans this week in lieu of buying the cash market. And they're the ones that pushed it to the upside. So that's possible. So, where do we go from here? I think the real question mark is if South America has a big crop, no weather problems there, no weather problems in Argentina, although it's a La Nina year. Without weather problems there, we're left with our ending stocks growing unless China buys a whole lot more soybeans from us than it looks like right now, or unless South America gets a weather problem. Because let's look at it this way. They bought 11 million soybeans so far this year, and they're committed to buy 441 million. And last year, they bought 790 million from us. So we're going to have to find some new markets very quickly. And I think we will find some new markets because it's a world market, and probably Brazil and Argentina are going to sell more beans than they normally would. So that leaves a void for somebody, and we pick up the void.
Don, you mentioned that there were some rumors there, and I think back when I knew very little about commodities and I was interviewing you and you would often teach me things, one of the first things I learned was the idea behind buy the rumor, sell the fact. So if you are buying that rumor, when would those facts come out for you to know when selling would be a good idea?
Well, I think look at it this week. We've gone up, for basically 10 days, adding premium to the market. The news has turned stale. And you're right. We're up here a 5-day high. We haven't been able to make any new highs. So at this structure, the way the charts kind of tipped over a little bit this week, even if China does announce, and I think that's what you're saying, that's what you're looking for. If they buy some stuff next week and the market doesn't go up, it goes down, that means it's already all dialed in, David. Just like you're saying, buy the rumor, sell the fact. It's the futures market. We get it dialed in, and once you see it, it's old news, and you're looking for the next story.
Speaking of next stories, corn, another huge grain commodity here in the heartland, and also facing serious challenges, primarily when it comes to cost of production versus value for producers. Input costs are at all-time highs, and farmers are really struggling to find any sort of profit in this crop. What is holding this corn crop down amidst all of the news, especially after I've been hearing a lot of private estimates that the bushels this year were down for many farmers in corn, and we're going to have less supply potentially. In the absence of government reports, official data, and looking at this market, how do we maintain this level where farmers cannot make money?
Well, you're exactly right, David. While the soybeans are higher than they were a year ago, and the input cost is much less, the corn market is just the opposite. It's a market that, the cost of production is just very high. I mean, who would have thought at 200 bushel yield and $4 cash corn that you lose money? So, I mean,
It's crazy.
it tells us how lofty the input costs are right now. So you're exactly right. A lot of producers, rather than having 380 or 390 or $4 corn, they really need 440, 450 or something like that. And of course, would rather have a higher value than that. Well, what's going to get us there? The insurance is now behind us because we're past October. It looks like most people are not going to collect insurance on that one because the market went up, too much, even though the yield may be down. So I think what you're saying is in some areas, we have the gut slot of Iowa, the yield is really disappointing, but then you have some other, and I mean disappointing when you're talking 190 to 200,
Right, yes.
disappointing. And then you have other areas that, is very lofty. So I think the real question mark, and we're not getting government reports right now. We will get the November 14th report, but we're not getting weekly reports, updates. But I think the bottom line is we'll be very curious in this November report. Is it going to be similar to last year? And I'm talking corn, where the yield report after report into the final January just kept going lower and the market kept going higher. And remember, last year, we were talking very poor prices, same type of thing, no hope. And then the yield kept going lower. We ended up going to 521 and a half in March corn in February after the crop report, which was very bullish. So do we have those things in the cards? I would say right now, in order to propel this market up, into this 450, 460 level, you're probably going to need a yield somewhere around 180. Last year we were under 180. So is that possible? Good guessing game going to go forward here, David. But that November 14th report is going to be very interesting. And it'll be very interesting. That's corn. What happens with soybeans with the balance table? What are they going to do to the exports on soybeans to China?
We spoke a bit in soybeans about figuring out places to go, and corn, one of the places that has been developed is ethanol. Another report that it was supposed to come out in November, supposed to be on the way, is RVO numbers, official ones, not just the proposed ones that we got earlier this year. How are those RVO delays and RVO estimations going to affect, in your mind, things as we move forward?
Well, I mean, one thing, you're exactly right. I mean, not just in corn, but in soybeans. Our growth area, particularly in soybeans, is the biofuels. There's no doubt about it because Brazil keeps expanding. They keep beating us to the punch on exports. And so much like ethanol, that's our growth area. So I think it is a little concerning that we don't get these numbers out. It's also a little concerning that our fossil fuel demand is down, which means, our blending is down, which means our volumes are down. So, and some of these small plant exemptions are, an issue. They have been an issue for a long time, but that's our growth area. So I think we have to watch it pretty close, David.
Don, I definitely would love to talk more with you on grains, but I really do want to talk a little about cattle as well, because that has been a pretty fluctuating marketplace this over the past couple months, but I'd say this year, even in its entirety. I don't think I've seen in the last 12 years that I've been doing just daily market observations, cattle going up or down a matter of $2 or $3 almost every single day, with maybe once a week going up or down $7. It is just fluctuating so intensely. What's going on there?
Well, you're right. It's a very volatile market, and it's been a volatile market for a long time. I think the bottom line is we're putting in a cattle cycle high, and that means that the supplies aren't out there, the demand is there. You push up wildly to these numbers, and then you ease back. We always say take the stairs up and the elevator down. Well, we've been taking the elevator down. But in the big picture of things, I'm not so sure, David, we're not very much like 2014. That was one where our supplies were 5% lower than the year before. Going into 2015, this is like us going into 2026, they were down another 6%. Doesn't that sound familiar? They're talking about the only way we can solve this is through imports, and the demand's going to have to slow down because it's been too strong. Well, what happened from October 31st of 2014 to August of 2015, we dropped 30%. So if you take that in context and you believe that's the case, and we hit 248.30 on December cattle, if you take 30% off of that, you're down like $75 off the top. So this is part of the problem in these cattle cycles. We talked about it's a futures market. By the time you get to the real news, it's over and you're going the other way. And you say, well, the cattle guy's not going to expand. Well, what happened in these other cyclical years, the cattle guy has started to expand. And what he does is as the market comes down, he goes, well, I can't afford to sell them, so I'm going to go to work and breed them again. So it's kind of that self-fulfilling prophecy of expansion.
I think that would be absolutely devastating for producers today, because as we reached almost 2 years ago, that big news item of we have the lowest cattle herd since the 50s, the smallest cattle herd since the 50s, prices, especially of calves and heifers, went up tremendously. So if you were someone who invested 2 years ago and your newest batch, your newest calves are finally reaching market level, or you go a year ago when prices were even higher and you drop 30%, that's going to be a lot of folks out of business. How do you look at that? How do you approach that from a technical standpoint when it comes to the marketplace by introducing, as leaders have suggested, of Argentinian beef or Brazilian beef and bringing them here?
Well, this is exactly right. And we're not even talking about the border's been closed. And that's, 50,000 head of feeders a month coming
right.
through.
Screwworm closures.
Screwworm closures. So what we do is, I always say for all the bull news that you had taking you up, screwworm, beef not coming in, demand strong, the same news takes you down. Demand softens, border opens, beef comes in from these other countries, and the market goes down. But David, we talk about that. How could it go down? We got to 248. We're talking about maybe going back to 180. It wasn't more than the spring when we thought, how in the world can we get to 200? That's unbelievable. And, thought if you could ever get to 220, that would be unimaginable. Well, now we're slightly over 220 and people can't believe it can go down. So how they turn you around. But you're right. Very dangerous market. Make sure you do a lot of good risk management, David. That's what we're here for.
I think that's a very good point, because when it comes to this market specifically and its volatility, what are ways that you recommend if folks call you and they're like, hey, I really want to make sure I'm protected? Is that something that you help out folks with?
Well, we definitely do, and we definitely have been. And we, Dave, I don't want to talk my age, but I've been at this 47 years. So we're, we've seen a lot of these come and go. And, I would say we're in another one where you just have to make sure you're with somebody that knows what they're doing, they're experienced, and know how to use all the right tools, because it's a very dangerous market if you don't, David.
Our market analyst is Don Roose, president of U.S. Commodities. Don, if folks are listening in today and they were interested in talking to you or your team over there at U.S. Commodities, what would be a couple good ways to reach you?
You bet. Can reach us on our 800 number, 800-247-4071, locally 515-222-1393, or look us up on the web and send us an email, uscommodities.com.
Don Roose, thank you so much for joining us on Farm Your Daily.
Thank you, David.
This is Farm Here Daily, a Field Forward podcast. Thank you so much for listening. Again, in order to continue to produce this type of local content, we would love to have you join our community, so please follow the podcast as well as our social media channels at Field Forward Pod. You can also find me on social media at Geiger Reports. Again, I am your host, David Geiger, and I'll be back again on Monday. Have a good weekend, everybody.